When to know how to use cryptocurrency payments in the Bitcoin market. The use of cryptocurrencies for payments in the cryptocurrency market has grown significantly in recent years. Here is a complete overview on the subject. Advantages of cryptocurrency payments. Decentralization. Without intermediaries, such as banks or governments, transactions are faster and have fewer costs. Transparency and security. Thanks to blockchain technology, transactions are immutable and transparent. Global accessibility. Allows fast international payments without the high fees normally associated with bank transfers. Privacy. Offers greater privacy, as it does not require the same amount of personal information as traditional methods. Disadvantages of cryptocurrency payments. Volatility. Cryptocurrency prices can be very volatile, which can pose a risk to both traders and consumers. Limited adoption. Although growing, it is still limited compared to traditional payment methods. Regulation. Lack of clear regulation can be a barrier to wider adoption. Technical complexity. It can be difficult for beginners to understand and use cryptocurrencies. Main cryptocurrencies for payments. Bitcoin, BTC, the most widely accepted cryptocurrency. Many companies have started to accept it, including big names like Microsoft and Overstock. Ethereum, ETH, used both as currency and to execute smart contracts. Litecoin, Lieutenant Colonel, known for faster transactions and lower fees compared to Bitcoin. Ripple, XRP, focused on facilitating international payments for financial institutions. Common uses. E-commerce. Many e-commerce sites accept cryptocurrencies as a form of payment, offering an alternative to credit cards and PayPal. Services. From hosting services to freelancers working online, many professionals accept cryptocurrencies. Travel. Travel companies like Expedia accept cryptocurrencies for booking hotels and flights. Donations. Charitable organizations and NGOs accept donations in cryptocurrencies due to the ease of international transfer. Challenges in future. Scalability. Cryptocurrency networks need to improve scalability to handle a higher volume of transactions. Regulation. Regulatory clarity will be crucial for mass adoption. Market adaptation. Acceptance by merchants and consumers needs to grow for cryptocurrencies to become a common form of payment. Security. Although blockchain is secure, the security of wallets and exchanges is crucial. There are cases of hacks and fraud. Regulation. The lack of clear regulation in many countries can create legal uncertainty. Scalability. Blockchain networks face scalability challenges, affecting the speed and cost of transactions. Thank you, guys.